Hello, future millionaire investors. Warren Buffett, being the richest investor, advocates for people to invest their cash in assets instead of holding it as it loses its value every year. In our last video on the 6 Warren Buffett renowned rules of investing, on the first rule, we said that holding cash isn't the best investment, so in this video, we'll be going through the 8 best Warren Buffett advocated assets that are better and valuable than cash. Kindly, do like the video if you find this video valuable and subscribe to the channel to learn more about personal finance and investing. Let's begin. 1. Farmland. It may be surprising to many that farmland is one of the best investments that Warren Buffett advocates for and even owns more than 240,000 acres. Warren Buffett has often extolled the virtues of investing in farmland, viewing it as a stable and valuable asset. He once said, "It's a way of buying a stream of earnings that's very reliable." This underscores Buffett's belief in the steady income generated by farmland through crop production. Unlike other investments subject to market volatility, farmland tends to provide consistent returns over the long term. Not only that, in one of his annual letters to Berkshire Hathaway shareholders, Buffett famously stated, "Owning a piece of farmland is a way of ensuring that whatever inflation exists will translate into higher land prices." This statement underscores his belief in farmland as a hedge against inflation, unlike cash, which depreciates over time. As the global population grows and the demand for food increases, the value of farmland appreciates, making it an attractive investment option. Additionally, farmland offers the potential for diversification within an investment portfolio, as it typically exhibits a low correlation with other asset classes that we are discussing in this video, thereby reducing overall portfolio risk. Overall, investing in farmland aligns with Buffett's preference as one of the best assets with enduring value and predictable cash flows. 2. Stocks. Warren Buffett is a staunch advocate of investing in stocks over holding cash, primarily due to the potential for long-term wealth creation. Unlike cash, which offers minimal returns and is vulnerable to inflation erosion, stocks represent ownership stakes in businesses with the potential for growth and profitability. By investing in well-established companies with strong competitive advantages and reliable earnings, investors can participate in their success and benefit from capital appreciation over time. While stocks can be subject to market volatility and short-term fluctuations, Buffett emphasizes the importance of focusing on the underlying fundamentals of companies and taking a long-term perspective. Historically, stocks have delivered superior returns compared to cash, making them an attractive option for investors seeking to grow their wealth over time. 3. Value stocks. Talking about stocks, Buffett's investment philosophy is deeply rooted in value investing, which involves identifying undervalued stocks that have the potential to grow over time. Unlike cash left to sit in the bank, which offers minimal returns and does not keep pace with inflation, investing in undervalued stocks allows investors to buy assets at a discount to their intrinsic value. By buying shares of companies trading below their true worth, investors can benefit from capital appreciation as the market recognizes and adjusts for the company's true value. Additionally, value stocks often pay dividends, providing investors with a continuous source of income every year. While value investing requires research, patience, and discipline, Warren Buffett has demonstrated its effectiveness over his long and successful investment career. Overall, investing in value stocks offers the potential for significant returns and wealth creation, making it a preferable alternative to holding cash in the long run. 4. Real estate. Warren Buffett recognizes real estate as a valuable asset class that offers several advantages over holding cash. Firstly, real estate provides a tangible and stable investment with the potential for long-term appreciation. Unlike cash, real estate properties tend to increase in value over time just like farmlands, driven by factors such as population growth, urbanization, and demand for housing. Additionally, real estate investments offer the opportunity to generate passive income through rental properties. By leasing out residential or commercial properties, investors can earn steady cash flow, providing a hedge against inflation and enhancing overall returns. Moreover, real estate investments provide diversification benefits, as they are often uncorrelated with traditional financial assets like stocks and bonds. Buffett has invested in various real estate-related ventures, including purchasing individual properties and acquiring shares in real estate investment trusts. When evaluating real estate investments, Buffett emphasizes the importance of understanding the local market dynamics, such as supply and demand trends, rental rates, and property values. He looks for properties with attractive long-term prospects and favorable cash flow potential. Overall, investing in real estate allows individuals to preserve capital, generate income, and benefit from potential capital appreciation, making it an attractive alternative to holding cash. 5. Business acquisition. Warren Buffett has built his investment conglomerate, Berkshire Hathaway, through the acquisition of various businesses across different industries. Buffett sees business acquisition as an opportunity to invest in companies with durable competitive advantages, strong management teams, and favorable long-term prospects. When evaluating potential acquisitions, Buffett emphasizes the importance of understanding the underlying business fundamentals and assessing whether the company has a sustainable competitive position in its industry. He looks for businesses with predictable cash flows, high returns on invested capital, and the ability to generate shareholder value over the long term. Buffett is known for his hands-off approach to management, preferring to acquire companies with competent management teams in place and allowing them to continue running the business independently. By acquiring businesses with strong growth potential and holding on to them for the long term, Buffett aims to generate consistent returns and build shareholder wealth over time. Business acquisition requires thorough due diligence, negotiation skills, and a deep understanding of the target company's industry and competitive landscape. 6. Index funds. Index funds are another investment option that Warren Buffett often recommends as a preferable alternative to holding cash. Unlike individual stock picking, which requires time, research, and expertise, investing in index funds offers a simple and cost-effective way to gain exposure to a diversified portfolio of stocks. He once said, "A low-cost index fund is the most sensible equity investment for the great majority of investors." He advocates for index funds due to their simplicity, low fees, and ability to provide broad market exposure, making them an attractive option for those seeking long-term growth in their investment portfolios. Index funds track the performance of a specific market index, such as the S&P 500, by holding a basket of stocks that mirror the index composition. That is why it is said in an interview, "If I had a choice today for a 10-year purchase of a bond and whatever it is, or buying the S&P 500 and holding it for 10 years, I'd buy the S&P in a second." By investing in index funds, investors can benefit from broad market exposure, diversification, and the potential for long-term growth. While index funds may experience short-term fluctuations and market volatility, Buffett emphasizes the importance of taking a long-term perspective and staying invested through market cycles. Overall, investing in index funds provides a simple, low-cost, and effective way to grow wealth over time, making them a preferred alternative to holding cash. 7. Technology companies. Although Warren Buffett has traditionally favored more traditional businesses, he has recognized the potential of certain technology companies as investment opportunities. Buffett's approach to investing in technology companies emphasizes the importance of understanding the underlying business fundamentals rather than solely focusing on technological trends. He looks for companies with strong competitive advantages, durable business models, and consistent earnings growth potential. Buffett often seeks out technology companies with established market positions, innovative products or services, and competent management teams. He aims to invest in businesses that can sustain their competitive edge over the long term and generate shareholder value through steady earnings growth and capital appreciation. While Buffett has historically been cautious about investing in technology stocks due to their rapid pace of change and inherent risks, he has made exceptions for companies that meet his stringent investment criteria. For example, Buffett's investment conglomerate, Berkshire Hathaway, has acquired stakes in technology, giants like Apple, citing their strong brand recognition, loyal customer base, and robust financial performance. Overall, Buffett's approach to investing in technology companies underscores the importance of conducting thorough research and analysis to identify businesses with sustainable competitive advantages and long-term growth potential. 8. Commodities. Warren Buffett has offered mixed views on investing in commodities such as gold, silver, energy, and oil. While Buffett has historically been critical of gold as an investment, often citing its lack of productive value and inability to generate cash flows, he has acknowledged the value of commodities in certain contexts. Gold and silver, in particular, have been viewed as stores of value and hedges against currency devaluation and inflation. These precious metals have been used for centuries as a medium of exchange and a safe haven during times of economic uncertainty. Additionally, gold and silver have industrial applications, particularly in electronics, making them valuable commodities beyond their role as stores of value. As for energy and oil, Buffett has invested in companies within the energy sector, including utilities and integrated oil companies, as part of his broader investment strategy. While energy and oil investments can provide exposure to global economic growth and energy demand, they also come with risks related to commodity price fluctuations, regulatory changes, and environmental concerns. Buffett advises investors to approach commodities with caution and to consider their role within a diversified investment portfolio. While commodities can offer portfolio diversification and inflation hedging benefits, they also carry risks and may not be suitable for all investors. As with any investment, Buffett emphasizes the importance of conducting thorough research, understanding the underlying fundamentals, and maintaining a long-term perspective when considering investments in commodities. Buffett famously said in his 2011 letter to Berkshire Hathaway shareholders, "The production of goods and services in the United States is worth about $50 trillion. Its largest single component is the household sector, which produces $13 trillion of that total. Every year that goes by, you would expect the value of the dollar to go down. It may not happen this year or next year, but eventually, it will happen." This statement reflects Buffett's view on the purchasing power of money, showing the importance of buying assets with the cash you have now as its value depreciates with time.